Hi, everyone. Thanks for joining ZenLedger's Tax Awareness Week. I'm Pat Larsen, CEO of ZenLedger. Joining us is Don Fort, Chief Business Officer of IBEX and former executive at IRS Criminal Investigation Division. Don, thanks for joining us.
Yeah, appreciate it, Pat. Happy to join you for this Fireside Chat.
Do you mind giving a quick background?
Sure. So as Pat mentioned, I was previously with the IRS. So from actually 1991 until September 2020, I was with IRS Criminal Investigation, pretty much right out of college, and worked there for almost 30 years, all in the criminal division of the IRS, and retired in 2020 as the chief. So the head of the agency, just real quick, because we'll refer to IRS CI a couple times. It's the criminal division of the IRS. So largely the IRS is an administrative tax collecting body of about 80,000 employees, but there is a criminal division, which is about 3,000 employees. And they enforce the tax code, and they also have money laundering jurisdiction and a pretty broad jurisdiction, really interesting job. And, it's really germane to the conversation today because they do some amazing work around cryptocurrency. So retired in September 2020, do some work with a law firm, consulting firm, crypto clients and whatnot. And then about August of last year, joined IBEX as their chief business officer. And IBEX is an open source, leveraging publicly available information, really to develop tax leads for taxing authorities, but also pretty heavy in the financial crime space. As we're rapidly hurtling to a paperless society, and all people have is digital footprint, and like everybody else out there, you probably have 300 usernames and passwords. There's a lot of information that's left out there on the internet that's really, really important for investigators to gather, and can really tell some important stories and help piece cases together. And in fact, a lot of the big cases that the U.S. federal agencies have worked have, there are those clues and those mistakes that people leave behind that digital footprint. So it's been an interesting career for me, and, very interested to be involved in this crypto space.
Yeah. As a quick crypto 101 on why cryptocurrency is important to tax regulators and auditors and investigators, and then why it's difficult, just for our audience. So one thing is cryptocurrency is reasonably new, especially in kind of like a mass adoption where more than 5 or 10% of a country's population is using it as a medium of exchange, a currency, a security, a bet, and you can self-custody it. And there's encryption and anonymity or pseudo anonymity. So that makes things like sales tax and capital gains tax, income tax difficult. But countries, have treasuries and revenue departments that are, tasked with doing this stuff. And age-old struggle between the individual citizen and the sheriff and the tax collector continues to play
always
out. Yeah. And in the United States, do you want to kind of describe a little bit of the situation from the IRS perspective, and then perhaps from the conglomeration of regulators that we have, kind of trying to figure out how we should deal with cryptocurrency?
Yeah, on the last point, it's the alphabet soup of pretty much every agency in the United States trying to stake out their territory and their ground in crypto. And it's really kind of a fascinating landscape in the U.S. with the, not only law enforcement agencies, taxing authority like the IRS, and then every other regulatory body, right? SEC, CFTC, lots of different bodies at stake. From the IRS perspective, hopefully the folks that are listening in file their tax returns. So you're familiar with the question that appears on the tax return and has appeared for the last 3 or 4 years, that asks about your cryptocurrency holding. So it's been, if you go back, and it was interesting for me because I was actually at the IRS and was party to these discussions about, how are we going to get behind this compliance issue? So there was a period of time going back 5-6 years ago where, like Pat said, there was starting to be some adoption. Bitcoin was out there. The value was starting to skyrocket. Coinbase, other sites out there were starting to gain popularity. And in terms of people reporting capital gains from cryptocurrency, the IRS is able to do a certain amount of analysis around the tax returns and realize that very few people were actually reporting any income or capital gains from taxation. Less than 1,000 actually at that time. So we recognized that there was potentially a huge gap there. And the goal was really education, let people know that it's taxable. The IRS came out in 2014 and stated very clearly that it's property. So from a tax perspective, largely that manifests itself in capital gains. But if you're also getting paid in crypto, you could have income tax as well. So the result was an education campaign. You heard the commissioner of the IRS, a lot of other high level folks at the IRS, including myself when I was there, reminding the public, trying to come up with every opportunity to remind the public that, by the way, you may have a taxable event. You need to pay attention to this. So you had that, that was fairly public. Obviously, the question on the tax return, which started, at the bottom of the page and has worked its way up to now this year and last year, the question about your crypto holdings and really to trigger your memory and make you think about, do you have any taxable event? That happens on the tax return right after you input your name and Social Security number, which is very interesting to say the least, because that appears before you even list your dependents on the tax return. So that's how important it is to the IRS. And really it was modeled after, if you follow the tax space at all, foreign bank account reporting, Schedule B, do you have check the block? Do you have a foreign bank account and disclose that? And FBAR reporting as a way to really, you're signing a return under penalties of perjury. You have to answer the question. So that was one of the mechanisms. The third was really the John Doe summonses. And we don't have a long time to talk about this today, but when the government and when the IRS doesn't have information reporting, one of the ways they go about trying to figure out which of its citizens may have a tax obligation is looking at US-based exchanges and issuing what's called the John Doe summons, which is different from a summons that the IRS would issue on an individual that they're auditing or is under investigation. And it really goes after a pool of people that have a commonality, that they're trading in cryptocurrency at this exchange. It exceeds a certain dollar amount. It falls within a period of years. And it's all very formal, and it's a process that the IRS uses and has to apply to the Department of Justice. And then there's actually a court proceeding that actually the court would order, if they approve it, the exchange to turn the information over to the IRS. So all of that really long-winded this way to say, when the IRS doesn't have information reporting, these are the primary means they go through to try to educate the public to recognize that they may have a taxable event. Think about it in terms of if you're a W-2 wage earner and you earn some capital gains and some dividends, you get a W-2, you get a 1099, the government gets it also. And the level of compliance there is really, really high because, human nature, if you get a form and you know that the government is getting the same form, more than likely you're going to report that. So without having that same level of information reporting at the IRS, there's more opportunities, unfortunately, for people to cut corners, or the potential for people. Let's face it, a lot of the folks that are in the crypto space of the younger generation, it may not be people that have 10 years of established tax return filing and may just need that that information and knowledge.
Yeah, there's a difference between tax optimization or minimization and tax avoidance, right?
Correct. Yeah, absolutely.
I do think that's interesting as well in that a lot of young people got into trading stocks, trading financial instruments, trading digital assets really a lot earlier than usual and with a lot more freedom and without very many checks and balances. And so that is a concern that a lot of people just are not educated on how to do basic personal finance, basic accounting, basic taxes. It's not, everyone complains about, it's not taught in high school. You're taught about, mitochondria, but not how to file your taxes.
Yeah, I think that I know, like, I have 3 kids that are in their 20s, and this is going back 4 or 5 years, but I think my kid may have been one of the few in the world to lose money on crypto that year. But it was only, I think, and my situation is maybe a little bit different since I worked for the IRS for so long and I'm a CPA. But generally speaking, I think a lot of times as you're raising your children, you're helping them with their tax returns as they're starting to become young adults. And as I'm preparing his tax return, I'm asking him, like, do you know what crypto is? Did you have any? Did you buy or sell any? And he'd actually gone through the Cash App and done some. But were it not for me calling him and asking that, I think he probably falls into the boat that a lot of young folks do, where they're not really thinking about, they're playing around with this cryptocurrency on the internet. They're not thinking, oh my gosh, I'm going to have a big tax bill,
Yeah.
So I think that's a point that's sometimes lost.
And it's very difficult in cryptocurrency. And the reason that you needed software and the reason started this company is because people were trading globally and with very low record keeping, if any. And they were self-custodying, and then they were putting it into a Coinbase or a Gemini, which takes custody for you. So that messes up the accounting. It messes up your cost basis and your holding period, which means your profit and loss and how much income and capital gains you have to pay. So that's why you need software to track it if you're not on just one place. If you're only on Coinbase, you could probably figure it out on your own, given their statements and maybe a little bit of Excel work. But if you're on multiple exchanges and you're using MetaMask and you're doing DeFi and you're trading NFTs, it becomes really thorny really quickly. I guess to that end, I think now, like 5 years ago, you could kind of, you could trade cryptocurrency and not really worry about the IRS, like kind of knowing that you were doing it. But now in the United States, there's know your customer and anti-money laundering at all the places you can turn dollars into digital assets and digital assets back into dollars. And now there's several warning letters that have been sent out in different waves. Do you want to talk about that a little bit?
Yeah, I think it's just that's the transformation in the digital asset area. As it, when it started, it was largely, not necessarily with an eye towards anonymity, but cutting out the middlemen, right? The bankers and everybody else that takes their piece along the way. But, like with any new asset class, digital assets being no different, you've got to take the existing framework that the US has, which is all geared towards, the Bank Secrecy Act was enacted over 50 years ago. And the primary purpose is to keep the US banking system clean and, for lack of a better word, that there's checks and balances that keep illicit funds out of the banking system, that keep the citizens safe, so that you can't walk into the bank with a bag of $100,000 worth of cash, and you can't go to a car dealership and buy a $50,000 car with cash that you've kept in a shoebox. So those laws exist for a reason. There's a lot of people in this industry. Of course, there's a lot of complaints, but when you look at our system, it's pretty effective at screening out cash and other suspicious transactions. A lot of that's done, back office by computers and models and algorithms now. And as the digital asset class becomes more mature, there's this push and pull between, the financial innovation of this class and the blockchain and the existing infrastructure around Bank Secrecy Act and, anti-money laundering regulations, and banks and financial institutions really knowing who the actual customer is. And so I think it's been, over the last year or two, you've seen at least some of the big crypto firms at least saying publicly that they embrace this, that they embrace the fact that, they're going to have to abide by those same, the same laws and regulations that the banks and financial institutions do. But I'd say there's still work to be done there. And I think the real challenge there is, Pat, something you alluded to. It's easy if you're on Coinbase or Gemini, right? A couple of years from now, it's going to be seamless. You're going to get a 1099. It's all the blocks will be filled out. You'll be able to upload it into TurboTax or provide it to your return preparer. but the fact that you can keep it, the DeFi factors of it make it a little bit more challenging. So what you're really seeing is, the regulators, the taxing authorities trying to catch up and apply, in some cases, the rules of decades ago to a new existing technology. And I think, again, there's still some work to be done there.
Yeah, it's definitely difficult. And this isn't specific to crypto. Governments, especially developed countries, they'll go after secret assets anywhere, right? Liechtenstein, Switzerland,
Right.
Panama. It's an ongoing trend, right? And you can kind of take things from the individual taxpayer perspective of like, man, this is like pretty burdensome. But at least with IRS CI, some of the wins were human trafficking rings or terrorist funding that were using cryptocurrency. And so you guys investigated those things, right?
Yeah, so I kind of started with that with IRS CI. So it's an agency that all they do is investigate financial crime, tax crime. Other agencies do amazing work. The way the system is set up is that you've got the FBI, whose primary mission is counterterrorism and protecting the homeland. Secret Service, primary mission protecting the president. IRS, again, it's all about financial investigating. And, this early on, this going back again 5-7 years ago, when investigators first started to see cryptocurrency being used in various crimes, gave them kind of a leg up on becoming experts in this area. And again, what you would expect. It's money, it is in effect money, and it's the transfer of the cryptos that are being used to move the illicit proceeds. And so going back as far as Silk Road and basically every large crypto takedown you could think of has had IRS CI involved. The government's done a much better job at multi-agency investigations, multi-jurisdiction, around the world. Partnering with private industry, basically using all the tools that they have available to be able to investigate these crimes. And when I started on the job 30 years ago, I would say you have the luxury of time, right? Everything was paper based. You couldn't, if you wanted to open a Swiss bank account, you had to get on a plane and go to Switzerland. Now with the speed that money moves, like basically as quickly as Pat and I could whip out our cell phones, we could transfer money back and forth. So in a lot of ways, investigators don't have the luxury of time. And when these really bad, actors that are out there, like Pat mentioned, this case called Welcome to Video, which was the monetization of child exploitation, and IRS CI tracking that, following the money to be able to solve that case. But that, it's a much more complicated story than that. It's IRS CI and their expertise, but you've also got the expertise of the Department of Justice, the other agencies that are out there like Homeland Security and FBI. And then you've got the relationships with prosecutors around the world, investigators around the world. And what I always describe as a missing piece that, I was there to witness it firsthand, is never before had investigators as openly embraced private industry, and private industry being firms like Zen Ledger, but also banks, financial institutions, basically anybody that can help us solve these hideous crimes. We want you to be part of the team with us. So that to me is really was a sea change for the way investigations are done in the US. And I think now you're seeing that on a broader scale than just crypto, understanding, that take IRS CI as an example. They investigate, they're financial investigators. Let them do what they do best. They're not computer scientists and data analysts. So if you want to solve a crime where the money disappeared today, you can't afford the time to train up your people to be able to do that, the computer specialist type of work. So that's kind of been the recipe, and something that they've continued right up to present day.
Do you think there was some news that there has been increased funding for the IRS, which is kind of like a misnomer because there's been decades of decreased
Yeah.
funding. So like you're just kind of coming up from a low base. But in the cryptocurrency world, they talk about how there might be more warning letters and more audits for cryptocurrency investors. Do you have any thoughts there?
Yeah, I think so. So it's interesting and timely because just today I read about the proposed, somebody on the, I think it was Ways and Means, made introduced a bill to funnel that $45.6 billion to border protection, which probably won't happen. But it's still very controversial, particularly on one side of the aisle. But I think there's at least an assumption that the IRS will get some additional money, and some of that will go towards compliance and enforcement. And I think the important thing to realize is a lot of it is education, like we talked about earlier. I lived on the criminal side of the IRS for 30 years, and it's easy to have blinders on and see the hideous activity that's going on with crypto. But when you step back from it, we all need to recognize that it's not just bad actors, right? It's technology that actually really has a legitimate purpose. The blockchain has amazing applicability in lots of different fields, and it's really going to change the way we do business. But a lot of it is education based. So I think that there needs to be better education, better information reporting. I would expect what the IRS would call soft letters, similar to what they did on the Coinbase John Doe summons, a series of letters that are in a spectrum. The softest of the soft would be, we believe you may have an issue, you may have taxable issue with cryptocurrency. Take a look at your tax return. To, we know you had an account, we know you underreported it. You have till this such and such a day to file an amended return, and then the ones that are kind of taken off the top by IRS, CIS, potential criminal issues. I think it can't all be investigating your way out of it. That's a very, very expensive, inefficient, unrealistic way to solve a problem, is by trying to work all these cases criminally. You really need to have an awareness, get the letters out there, educate the public. Once information reporting comes on and becomes more fulsome, then I think you'll see that coming. But I would expect some additional audits in that area. So.
Yeah, I think there will be some sort of crystallizing event. I don't know if it's the United States, but I know United States Federal Reserve is studying central bank digital currency. You have Wyoming, which allows for the creation of cryptocurrency banks. And around the world, there are other central banks kind of looking at this. So it'll be kind of interesting to see how we do things in the United States, but then also how we try to work things into like a global financial regime.
Yeah, I mean, I definitely, that's the future, right? And that actually, I think folks can grasp that, even if you're of an older generation like me, or even older like my parents that have a hard time grasping it, right? That this concept that a cryptocurrency is not backed by anything, but yet it has some value, is hard for people to grasp. I think it's much easier to grasp the concept of a central bank that actually has some backing. To me, I think that I think we'll start to hear more and more about that.
Yeah. I mean, people have always wanted to place their bets, right? A Babe Ruth rookie card isn't valuable to everyone. Can't eat it. It's not a sandwich,
It's FOMO, right? Fear of missing out. And then you see all these people making massive amounts of money. Unfortunately, now I think you see people that maybe missed the wave and have lost tons and tons of money, but still.
Yeah. And it's just like equities, right? You can have tech companies with massive losses, and their stock goes up a lot, and everyone wants to jump into it.
All right.
Yeah, I think those are all like really interesting things that are going to come about. Let's see here. Anything else we want to discuss? I think we've talked about most of the topics we wanted to cover. And I think if you're kind of watching the stream, you are kind of bought into the fact that cryptocurrency is generally used for very legitimate means. It's a way to actually increase accountability and trust and reduce transaction costs. I think in remittance, that's a huge thing, that instead of only 50 cents on the dollar getting back to your family, 99% of the Bitcoin or Ethereum that you're sending gets there now. And the person that your family's renting a home from or buying groceries from is probably going to start accepting stable coins or Bitcoin or Ethereum as well, you just get a lot more that'll lead to like education and nutrition benefits back in the home country. Like those are some of the like the most promising and inspiring of the parts of cryptocurrency that I think about as compared to the traditional financial system where Western Union takes a toll, the local money changer takes a toll, and you're in a country working very hard to make your family better off, and they're only getting half of what you're setting.
Yeah, and I guess I would say, just in terms of overall adoption, like I've never been one that's bought into this idea that it's going to be for daily use, because, and you've referred to it a couple times, it is more akin in my mind to an equity. And just like you wouldn't take if you had an account with Vanguard that held a lot of your assets that you were investing, just like you wouldn't you wouldn't sell $10 of those to buy a sandwich. Is it really practical that you're going to buy $10, exchange $10 of crypto for a sandwich when there's no de minimis exception? It's going to create all kinds of headaches for one transaction on basis, and then multiply that out. If you were going to use it like your credit card, multiply that out by thousands, and just imagine the headache that creates. So I think that's, there was legislation introduced last year that died with the current Congress that had some, I think what people in the industry would say, more common sense rules around crypto. Now, I think with the FTX collapse and everything else, they're going to relook at everything. But I think eventually there'll be hopefully some good legislation that comes on board. And one of the interesting pieces I think would be really that de minimis exception, that there's got to be some threshold. And for somebody that used to be in the tax world, it's hard to grasp. But there is precedent for that. When you're traveling in a foreign country and you have euros, or you have another currency in another foreign country, there is a de minimis exception in case there is a massive spike or a drop in a currency. There is precedence for that. That's one of the things that was in that bill, and I think that's one of the things that people want more clarity around. That if my capital gain was $1.10, like, is the IRS really care about that? So, a lot. I think you're going to hopefully see over the next year just more, hopefully more clarity, right, from all of the alphabet agencies in the U.S. Like, who's in charge? What's going on? What's the regulation? Is there going to be some more, legislation to help clarify for, the people that are using it, that want to use it, that want to be more comfortable using it, but want to know that, the federal agencies are not going to be breathing down their neck because there's they didn't report $2 in crypto gains. So.
Yeah. And overall, the trend is going to be towards more compliance and regulation, because the scandals keep getting bigger, just like in traditional equities, right? Like the 1920s were terrible. You create the SEC. There's banking scandals. You create more banking laws. There's .com bust and 2008 great financial crisis. You just put in more monitoring.
Mm-hmm.
You'll see the same in the United States, I think, because of that. So I guess general tips, maybe you can't do this, but to help you with your taxes and stay on the right side of the IRS, I would say keep good records. Consult a tax professional, file your taxes, and then if you need to, kind of minimize the amount of transactions you have, because then that minimizes the amount of taxable gains you might have. So those are generally the things we advise people to do.
Yeah, and just to add to that, so it's no secret that the U.S. tax code is unbelievably complicated, right? There's very few people anymore that can actually prepare their own tax returns. So a lot of times the advice is, if you're not capable yourself, hire a professional. This is another twist on it, right? Not only do you need a professional, you may need a professional that's more well versed and trained in crypto, like the work that Zen Ledger does in terms of computing the basis for the assets, properly filling out all the returns and forms and attachments and whatnot. So.
Yeah. And that goes with investment professionals too. Like if you're walking to an Edward Jones or something, the odds are if you're 30 or 40 years old that you have some crypto in your portfolio. So you kind of have to look for that. And same thing with a CPA. If you're walking in to engage a tax professional for the first time and you're in your 30s or 40s, you probably have crypto in your portfolio, and they may not have experience with it. So we do have education material for them in this tax week. We'll also have tax professionals speaking about some of those challenges and how to, get it right and for reduce the headache on the individual. Well, cool. I think that's like everything we've covered. Don, thanks so much for joining us.
Yeah, appreciate it. Really enjoyed it. Thanks for the conversation, Pat.
Okay. Cheers, everybody.